The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the August 30th Fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call, when you rule your mind, you rule your world. You know, great teachers down through the ages have described the importance of our mind and the importance of being a master of our thoughts. Buddha once said, the mind is everything. What you think, you become. And each of us, you and I, each of us has the most incredible tool, the power to alter the attitudes of our mind. Now, maybe we can't control what comes in, but what we can do is we can most certainly control what it is that we do with our thoughts. The best place to start each day is with a positive attitude. I hope that's one of the reasons that you tune in here at TFNN, because positive thinkers, guess what? We can accomplish anything. Now, Zig Ziglar, he once said, your business is never really good or bad. It's either good or bad right between your two ears. Now, our thoughts, folks, are most assuredly things. Our thoughts are conceived in the mind, and they travel through time and space like ripples in a pond. And as we all know, ripples affect everything they touch. Now, our thoughts, they are our building blocks. The world we see is the one we have created with our thoughts, folks. It's our mind that is our general contractor. It's Fantastic Friday. Rule your mind, folks, and guess what? You will rule your world. Stay positive and go build an incredible life. Our call number is 877-927-6648. Let's go check out the markets. Let's go see what we've got going on out here. Right now, flat market. Dow futures are 4 points. No big deal out there. Trade out at 14,838. S&P futures up 1.5 at 1638. NASDAQ futures up 4.5 at 3094. Biggest moves out here in the market this morning, gold. Goldilocks off $18, trading at 1394. Silver down 56 cents at 2358. We've got light sweet crude off 90 cents at 107.89. We take a quick peek around the globe, see what happened or what's going on right now over in Germany. The DAX is off 52 points. The FTSE down 34. We'll take a look at those charts just to get a feel for how things are trading, especially the FTSE. We'll go take a look at that. You know, I guess there are some discussions maybe France would be willing to join the U.S. on some type of military action over in Syria. So we'll go see how their chart is responding. Over in Asia last night, a little bit of a mixed bag. You had the Nikkei off 70 points. That was about 0.5%. And the Hang Seng was flat, up 26 points. Shanghai up a point, so flat as well. Again, our call number 877-927-6648. Let's go start taking a look at these charts here. Now, when we left yesterday, you know, I do the 9 to 11 o'clock slot, at least Monday through Thursday. I am out of town today, so sound a little bit different. If it does, my apologies, and the charts will look perhaps a little bit different as well. When we left yesterday at about 11 o'clock, we were taking a look at the ES-mini. Now, we had drawn in a pattern here that had showed that about 1645 was the area that price should start to move sideways or pull back. And that, in fact, if we take a look at 11 o'clock, the 11 o'clock high was 1644. It actually got up to 1644.75 during that 11:30 hour and then began to pull back and move sideways out here. Well, really what it did was it moved sideways for about an hour, and then it started that pullback out there. And so if you take a look at that, and that was just nothing more than just simply using the relative strength indicator out there. I didn't say that as the push was coming in at 11 o'clock to go ahead and close out a long position. Just said you need to be prepared for what would happen. Well, you got this little bearish thing. I'm going to go ahead and blow this up on the chart here. Where you see that the bears actually came in and took place was right here on this session at 12:30. You got a nice little bearish engulfing candle. Price moved back. If we take a look at what price actually did, it's really not too bad when you consider if we go from the A point, which would be 10 o'clock in the morning. That's on August the 28th. All the way up to, in essence, because a Gartley pattern is an A to B equals CD on the, in this case here, an A to B equals CD up that completed. And if we take a look at from the A to the D point, the actual retracement, a normal retracement would get you down to about 1632. We didn't see that. In fact, so far, the shallow retracement got down to 1634.25, so pretty darn close. But it looks like, there's another pattern that is setting up here in the ES Mini, and that is right here. It'd be an ES Mini buy right around the 1634, 1632 price area. Now, would you just jump in there? No. Just like up here at the top where you're waiting for a signal that the bears were going to go ahead and either move the market sideways or pull it back. You'd want to go ahead and wait for a bullish candle signal as well, because price can certainly do whatever it wants to do. It can come all the way back down here to the 1628 level. But the next pattern that would be set up here inside the ES Mini would be a buy pattern, would be a Gartley buy somewhere around 1632 to 1633 out there. Let's go take a look at gold. Let's go see what's going on with gold and silver here this morning. That's where we're seeing the largest pullback. And we know that gold ran into the, let's take a look. Gold had completed the looks like a 1-to-1, yeah. So completed a 1-to-1 A to B equals CD up. The actual price projection on gold was 1441, got up to a high of 1434. Did get a bearish reversal signal here. That was yesterday. A little bit of continued follow-through. We know that what gold was also in, on a daily chart, was also in the overbought condition. So now what we should see is gold pull back. We take a look at the logical spots for gold to pull back to. The first area is going to be 1336. 1336 is nothing more than a dead cat bounce. So that's the first place that we want to be paying attention to. The second level is going to be the 1276 area. That would be your sweet 618 area. In fact, what I'm going to do here, I'm going to go ahead and pull up the longer term. Let's take a look at a weekly chart for gold. Let me do this. This one here shows all of the different candle configurations out there. Here's the S&P on a weekly. We're going to spend some time with the weekly charts out here. But let's go take a look at gold so I can find it on here. Where's it? G, E, F, G. I should be able to figure that out. So we take a look at gold on the weekly chart out here. Now you can see if we go ahead and finish the session today as is, if gold finishes down, let me see what this level here is. If we finish down around the 1388 level, what you'd end up with is a shooting star candle inside gold after it had completed the 1-to-1 A to B equals CD up. No real, if we take a look at the weekly chart here on gold, no real, candle area of resistance or support out here. So I would just think we would look at our normal retracement levels, 0.382, 0.618. Let me see what the monthly chart, because we're also closing out the month for gold. So let's take a look at the monthly chart for gold. Now, the only bad thing on gold is that we're looking for a close. You'd really like to have seen a close above the candle. We'll settle for the body. This is the body here of June. And the actual body was to be 1388.80. Right now you're at 1394.50. The reason is that because you close above that body, then you've got, in essence, a two-weekly combined bullish engulfing candle. And there's nothing wrong with going ahead and combining a couple of candles in order to form one. So that's what you would be looking at inside gold. But it does look like what we're going to see here is a bit of a pullback. Let's go on to Nashua. To Lou. Lou, thanks for calling. Thanks for holding. How are you this morning?
Very good. I heard you talk about the ES Mini and the possible buy at the 32 level. Is that right?
Yes.
Okay.
Yeah. Well, what I'm saying is that at 1632, it would set up a 0.618 Gartley buy pattern. And, so if it moves down there and it gives you a bullish reversal signal, then the answer would be yes. Now, the ES Mini is neither overbought nor oversold utilizing the 14-period RSI. My preference would have been that it would move down towards that 30 level. But that's the next buy pattern that I see on the 30-minute chart that's out there. When I take a look at the 120-minute chart from yesterday, and the reason why there could be a bit of a buy and a push up to the 1651 level is because we had a nice wide-ranging bar here coming in at 11:30 yesterday. And you can see that price really just traveling with inside that wide-ranging bar. And the larger pattern inside the 120-minute chart says that 1651 could be the target here. But, here's my recommendation, Lou, if you are trading this. With us going into a holiday weekend, what I would first do is wait to see how the market trades here at the open. I think the first 15 to 30 minutes are going to be important. I wouldn't necessarily want to carry this trade over the weekend.
No, that's not. I wouldn't do that.
So what's your time frame that you would be looking at trading? I should have really asked that first.
Just today.
Yeah, just for the day. So, one of the things that concerns me a bit, let me go over and take a look at it, is the chart of the euro-yen. So let's actually go see what's going on inside this currency pair. So as we take a look at, now this is the 120-minute chart on the euro-yen. And my concern here, Lou, is that today, this 120-minute session that we're in, that's going to close out at 11 o'clock, this is the first potential time that we're going to see a close below this candle from 9 a.m. on August 27th. And what the euro-yen has been doing since that time period is traveling in a sideways range. And this is a really great leading indicator as to what direction price is going to go. And so, what I'm sharing with you is the next Gartley buy pattern out here. My conviction behind it would be just simply, it would be a very intraday trade out there. If the Euro-Japanese yen starts to head lower, our markets, they don't have to head lower today, but it is a leading indicator that there's a problem out there. So I hope that all of that helps you in putting together your trade for the ES Mini.
Yes, it does. And what's your take on the euro?
My take on the euro, we'll go over and do that. We're going to go into our first break here. Let me see here real quickly for you, Lou. We take a look at the euro-US dollar. What's your time frame that you're looking at on that trade?
Oh, probably a couple of weeks.
Yeah, it looks like it is a short from here. We should see the euro-US dollar pull back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Going back out to, I know Lou has dropped off the phone, but which is fine. I want to go back and just take a look at the euro. I've got the weekly chart up on the euro. We'll go back to the daily chart in a moment. But what we can see is that the euro has really been traveling for I would say for the time period of February of 2013, I've really been traveling in a sideways consolidation. If we take a look at that, the top of the consolidation is really going to be the 134-ish level, the bottom of which has got good support out here. You can see that support. I'm going to draw a line across the bottom of that morning star pattern out here, but the support is in the 126.7 level. So quite a sideways trading range. You had this 3-candle pattern is a weekly pattern out here. This is from the weeks of November 9th, November 16th, and November 23rd of 2012. Set up a Morningstar reversal pattern. And you can see each time down into this area, you've seen the bulls come in and step in. You know, whether that bull is Mario Draghi or it's somebody else out there that's buying doesn't really matter. The point is that it's so very helpful to understand support and resistance out here. And support, you can see you had a bullish engulfing candle the week of April the 5th as price moved down. You had another bullish engulfing here most recently, July 12th, 2013. But just like we're finding support down here in this 127-ish range, we're also running into resistance up here at the highs. You had this bearish engulfing candle the week of June 21st. The high of that is 134.15. That really set up your resistance band. We can see here last week got up into that area, was trying to break through there. And now clearly what we can see that's going on here this week, another bearish engulfing candle. So the likelihood with regard to the euro-yen, and I had given out a figure which was nothing more than a retracement level, which was going from the low of July 12th up to the high of last week out there. And you can see that the 0.618 area is 130.20, and that certainly is a likely target area. You always want to take a look at where your 0.618, 0.786 retracement levels are. But if we take a look at the weekly chart, right, if it couldn't bust them up and has been traveling in this sideways consolidation range, what is the euro likely to do? That's right. It is likely to bust them down. And so if there is any correlation between the U.S. dollar index and gold, then that should put some energy into gold pulling back as well. And so, you know, we've taken a look at gold on the daily chart out here. We've seen a reversal signal on the daily. And so, you know, we'll just have to see what that correlation is or isn't. But, you know, on the euro, that's really the targets that I would be looking for if you were inside of that trade. I'd be careful when the euro gets down to 127, or certainly tighten up your stops if you are in that from a longer-term standpoint. So unlike the ES Mini and trying to carry that as a long position over the weekend, I would be much more comfortable carrying the euro over the weekend in a short position. But you really don't need to. You can just hop back in and start trading that Sunday evening. Now, let's go take a look at some of the stocks here that are actually popping and dropping in the marketplace. If we take a look at some things that are up, you've got Salesforce Innovation. They were out with numbers after the bell. Let's go check in on that equity, see how it's doing. So it closed out at 43.65. Right now it's up 9%, 47.59. The numbers that they put out last night, they had a, where is it here? I thought I had it on my screen down below. I don't see the actual revenue numbers. Nonetheless, it is. They had earnings per share of 12 cents versus a loss of 2 pennies out there. So that's up a nice 9%. Apache Corp, APA is a ticker symbol they sold. What do they sell? Something over to Egypt. I should know. They sold a one-third stake in Apache Egypt assets for $3.1 billion, so that's up this morning. Splunk is to the upside, not to the downside. SPLK, that's up about 10% this morning. They're trading at 53.76. To the downside here, leading the charge right now, you've got OmniVision Technologies, OVTI. They're down about 13.5%. But let's go check in on a couple of these stocks here, see what they are trading into. Let's start off by taking a look at Apache. So Apache Oil trading out at 84.50. At 84.50, it's going to take on this most recent area of resistance that was set up by the gap down on June 20th. Do I have all the current data? Yeah, I do. So June 20th, this thing had gap down. I did it with some decent volume out here. That's the top of that area is 85.85. It's trading at 84 bucks and change. So that's where it's going to trade into. We'll see if that area holds as a resistance. It has here most recently, the last time up. And testing that gap area was on the trading session of July 19th. Let's go check in on Salesforce Innovation. Let's go see what that is trading up into. Closing out at 43.65. That this morning trading at 47 bucks and change. So it's going to be able to take out this B point potentially of an A to B equals CD up. And that is on August the 5th. We'll pull this back a little bit further. But August the 5th, the high there was 46.10. It's trading right now at 47.37. Only has 2.6 million shares up there, and this swing point that I'm looking at for May should be able to take that on as well. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and discuss trading strategy while gaining high-definition access to all TFNN hosts' charts and screens during their live daily programs. If you're not already a member at TFNN, then the easiest way to become a member is by simply signing up for our $10,000 virtual trading competition, and the rest takes care of itself. In order to register for TFNN's virtual trading competition, you have to sign up by Thursday, September 5th at noon, and that's right around the corner. So don't wait and sign up now. For all the information and to fill out your entry, visit the front page of TFNN.com. TFNN's open house in the Tiger's Den for 2 weeks only, ending September 13th. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 10 points, trading at 14,830. S&P flat at up 81 cents at 16.38. Composite off a buck. Russell 2000 down a $1.30. Apple up 72 cents. Microsoft down 18 ticks. Google up a $1.30. Leading the charge to the upside is Apache Corp. Up $6 and change. That's up nearly 8%. Salesforce Innovation. We're going to go back and take a look at that chart. We'll take a look at the monthly chart. Looks like that could be up and over resistance. You know what they say? Once you're over resistance, that becomes support. That's got clear room to run to the upside. That's up 9% this morning, up $4. Splunk up $4 as well. That's up 8%. Occidental Petroleum, OXY is a ticker symbol, up $1.44. Select Comfort. Hopefully you got a good night's sleep last night. And you'll get a little bit more sleep because we do have a holiday coming up. So, Monday is Labor Day. Markets are closed. Everybody be safe over the weekend. Select Comfort having a good morning, up 4%. You've got Facebook up about 1.5% this morning. Nuance Communications, they may have been out with numbers. They're up 3%. SOL is the ticker symbol for Renasola. That was up. That's still up. It's up 12.5%. That's up 57 cents. To the downside, Krispy Kreme donuts getting creamed here this morning, down 10%. Off $2 and change. Omnivision OBTI, they're off 12% this morning. Questcor Pharmaceuticals down about $1, down 1.5 Services Now, NOW, I believe they were down yesterday as well. They're down another 2% today. Green Mountain Coffee Roaster, that's down 62 cents. Our call number 877-927-6648. Give us a call, folks. We can take a look at your stock. Let's go back over and take a look at Salesforce Innovation. So we've got the monthly chart as we come into the month here. And as we take a look at the monthly chart for Salesforce Innovation, we can see some bearish patterns that it's trying to clear out here. Those bearish patterns really being the shooting star candle that took place here. This is the month of May 2013. Now, the top of that candle should be resistance. The high there is 47.58. If this closes above 47.58, obviously if you can do it with conviction, with some volume behind the move, all of a sudden 47.58 really becomes your area of support. Now, the way that I would take a look at this is I wouldn't use that as the penny for penny area of support. You want to use a range out here. And if we draw a line across the screen, first let me just draw a line, then we'll just go ahead and move it up and down. And if we take a look at that, you had a bearish engulfing candle back here. This was the month of February in 2013. You had this little bearish engulfing candle right here, the month of June 2013. And so you're going to need to, if you're in this equity, stay in it. I don't see anything wrong with it. Know that you're running into a little bit of resistance potentially at the top of the shooting star, but if it can clear that area today on the monthly chart, you now have a strong area of support. It's going to be somewhere in that 46-ish type range. If there is the lowest level of support is going to be down here at this little bull sash candle from last month. That would say that your next area of support, whoops, didn't mean to do that. Let me hover over this candle here. Didn't mean to do that. Sorry about that, folks. Multitasking. Oh, that didn't work. So forget that. Well, it's going to be the candle session. Maybe if I do this, it works. There we go. Okay, so the low, 36.09, that's your real level of support out here. But so far, CRM looking pretty good. If I switch over to the daily chart, let me go ahead and do that. Yeah, you got it, gapping up. Actually, let's go take a look at the volume behind the move. So far today, and this is going to be a light volume trading session. Things ought to lighten up probably by at least noontime. People wanting to get out to the beach for the supposed last weekend of summer out there. So far this morning, 4.7 million shares, taking out the swing point. Well, most certainly taking out the swing point here that has 2.6 million shares. So we're up and over that. That's a confirmed A to B equals CD up. On the daily chart, you had a swing point at May 20th with 6.3 million shares. So it's taking that out with volume as well as a swing point from March with 4 million shares. So you've got a confirmed A to B equals CD up inside of Salesforce Innovations on the daily chart. That will, assuming that it closes up here today, that will go ahead and give you a price projection on this equity. I need to shrink this. Give me a moment here to take a look at it. So the 1-to-1, 52.14, and 54.84 is the 1 to 1.272. If we take a look here at expansions, take a look at the potential butterfly that would be setting up here right around. So I would say that the next area of real resistance on this, or price targeted area, is going to be between 52.11, 54.84, but most likely 53.72, the 1.618 of the expansion here. That would set up this Gartley butterfly. I can go ahead and draw that in so you can see what that looks like. And even though you don't have this tool on your system, you're still able to go ahead and do these calculations because you're just simply looking at the swing points. Here's what that 1.618 butterfly would look like in the 53.74. But it looks to me like that is where Salesforce Innovations wants to run to. Now let's go take a look here at the commodities. Let's go take a look at silver and gold. See what they're doing price-wise as I come back and take a look at it. You've got gold's off $17, silver's down 60 cents, so it's down 2.5% this morning, and light sweet crude down 70 cents. So let's go peek in. We did gold earlier. Let's go take a look at silver, see what silver is doing. And as we take a look at silver, you can see this thing pulling back again. So we're seeing some reversal signals inside silver. The normal, and this thing here had done like a 1 to 2.618 A to B equals CD. The only thing after that would be 1 to pi. And what it did was it ran into a resistance, ran into this 200 period exponential moving average. Let me just clear off this screen just a bit. There we go. So as we take a look at silver, this green squiggly line that's on my chart here, that's the 200-day exponential moving average, which thus far is acting as a level of resistance. Now, what we can also see on the chart here, silver on the daily chart, weekly, monthly, quite frankly, I think it's gotten into the extreme overbought condition, so pullback is normal. Now, we're going to take a look at a couple spots where it could pull back to. Certainly, you want to go from the swing point low of June 28th all the way up to that high that came in on August 28th out there, and the .382 retracement level, 22.47. So it can do that in a heartbeat. Actually, it could do that, on Tuesday. But $20.83, that would be your .618 retracement. That would be nice. We'll pay attention to. Just have to pay attention to the volume on the pullback. If we take a look at the weekly chart out here inside silver, silver's got a nice little hammer candle right down here on June 28th. So the trend is absolutely changed inside of silver. I would say the 50-day exponential moving average, which is 21.95. So 21.95 looks to me like to be a pretty good target for silver to find support. If I go back to the daily, 21.95. It's going to take you, close to the so 2083 to 2195. That's probably your range for a pullback inside of silver out there. If we take a look at light sweet crude, we were talking about it yesterday, and it's traveling inside this little 7-point consolidation zone. That's the one that began establishing itself in the early part of July 4th, July 5th. On the spike up here a couple days ago, created a shooting star. That's a reversal candle. Just it's the opposite of the brother, only is going to come at highs. And that high out there was 112.24. What you also got was another reversal signal yesterday. You got a bearish engulfing candle. So it's back and never really got out of the range there. 109.32 was, in essence, what we were looking at was the top of that consolidation. But you got to give it a little bit of room because the close on August 28th was 109.48. So now that it couldn't bust it up, looks like we'll see light sweet crude come back and try to bust it down, get into the swing point of August 8th, probably right around the 102.22 level. I don't necessarily think that the move on light sweet crude is over. It's just that it couldn't bust it up. And so now what it would do is try to bust it down, and as long as it's in the consolidation range, continue to trade in here. Here's the only caveat I throw into this, and that's this. You want to be paying attention to this bar right here. That's the bar if you're in this trade for any reason. You want to pay attention to the bar of August 27, 2013, because I'll give it a little bit of room here for the shooting star candle. Price still traveling with inside this bar. If you do get a close below 105.88, that's what will send off a move down to the 102-ish level. That is on light sweet crude. If we take a look at natural gas, let's go see what it is doing. This thing has been a nice move off of that key reversal session here from August the 8th. What it has done, or is very close to doing, the 0.786 retracement off of its most recent swing point high to low. That would be the July 18th time frame, down to the low that came in on August the 8th. That level is 368 is the 0.786. It's been up to a high of 365. So it's made its next move. Looks like today just letting a few folks off of the elevator. Where this thing is going to head to, it's going to make a complete 100% move of a move. It is already close to being inside that swing point from July 18th. If it closes inside $3.60 today, then it will close inside that swing point, and that's what sets up probably a test of the high right around 383. That was on natural gas. If we take a look at some of the spiders, let's take a look at some of the weekly spider ETFs out here. Let's take a look at the S&P 500, the SPY, I should say. S&P 500, or the SPY, again, coming in and testing the gap up here from July the 5th. This is the weekly chart, so it's between July 5th and July 12th. There's a little bit of a gap out there. If you take a look at that, the high of July 5th was 163.08. The low of the following session, 163.58. You can see that that gap has been tested. If you get a close below the gap, that no longer will act as support. So from a bearish standpoint, what you would be looking for is a close below 163.08. From a bullish standpoint, you want to see a close above that. That just means that a level of support was tested and it held, and that is in the SPY. Let's take a look at a couple of the other sectors inside the SPY on the weekly charts. Let's go take a look at the technology sector, the XLK. As soon as I can find it here, it should be right in front of me. There it is, right in front of me, dead smack bullseye in front of me. As we take a look at the XLK, that's trading right now at 31.52. This thing has been really traveling sideways here since the early part of July. This has some very strong support, probably in the price level around $30. I guess we'd probably use the top of this candle, the June 28th level. So that would be your June 24th. Ish area on the daily chart. So it should have some pretty decent support at 30.88 right now, traveling at 31.53. But the real support out here is obviously the rising price channel that the technology sector has been traveling in ever since the March 2009 lows. And we can see each time that has been tested, it is held as a support level. Let's go take a look at the weekly chart here of the XLF, the financial sector. Inside the S&P 500, that is looking horrible. Now, that has broken the trend line. It's broken one trend line. That was a trend line coming off of the November 16th area. So it's broken that level with conviction. That'll set up a move down to the this next trend line. That's the one that was coming off of October the 7th. If we just take a look at retracement areas coming from the lows of November 16th, 2012, up to the high that was put in on July 26th, 1869 is your dead cat bounce area, is your 0.382, and also be a test of the June 24th lows. That is what the financial sector wants to do at least. Today, if we get a close inside the price, the high of 1960, if it closes inside 1960, it'll already be inside that June 28th bar out there. and should continue to go and test the lows, and that'll test that little red trend line that you see on my chart out there. What other sector? The popular sectors out here that folks play, the energy sector. So let's go take a look at that. Weighting structure here, you can see the energy sector on a weekly chart. Last week came down and tested the trend line. That trend line is a strong trend line. That's one coming off of really the lows from June of 2012. That trend line has held for obviously more than a year right now, so it's above that. Right now, today, you're not, for this week here, you're not seeing any kind of bearish signal, just really a flat trading session for the week inside of the energy sector right now, trading at 81.84. But we can't see the strong level of support inside. Let me take a peek here, see what the market is actually doing here right now. So the Dow's off 6. S&P is flat, 55 cents. So it's really just gold and silver that are moving in the marketplace. Let's take a look at some of these stocks out here popping and dropping. Let's go back. Let's go take a look at Krispy Kreme donuts out here. That is one of the larger moves to the downside, off 11%. So let's take a look at Krispy Kreme. Let me go over to a different tab here. Just bear with me for a moment. KKD, by the way, is the ticker symbol on that. There we go. Charts. There we go. Oh, I actually have it on my screen. How about that? Okay. Give me a moment here. So that is down. It looks like that's trading into the 50-day exponential moving average, KKD. This is the daily chart. Volume coming out of it so far this morning here. It's done 2.4 million shares to the downside. Yesterday closed with 2.3 million shares to the upside. This thing has some real strong support. A real big breakout session on this took place on May 31st, and the volume on that session is 12 million shares. So we're seeing some volume off of the top in Krispy Kreme donuts, but I suspect that this will not necessarily last with it being a light volume trading session. So this equity here is not falling apart at all. I will see how it responds as it pulls back further and into the May 31st level. So if you, we'll have to really come back and take a look at it on Tuesday, see what the volume is. So you do have volume picking up to the downside, but you got 12 million shares versus 2.5 million shares. Now, if this volume were to keep up this pace for the entire day, that's a whole different story. But we'll see. It should be able to find some pretty good support where it broke out. And it may just simply be the bottom of the gap, meaning the June 3rd, 2013 candle, which is at 1640 out there. The only reason I say that is also the 200-period exponential moving average, that little floating green line on my chart. 877-927-648. Dow's off 12. S&P is flat. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks, and if you haven't had a chance yet, then right now what I'd like you to do is go to the homepage of TFNN.com and sign up for the TFNN Virtual Trading Competition. $10,000 in cash awards, 70 total prizes. 10 overall winners are going to receive cash prizes up to $3,000. 10 runner-ups are going to receive an autographed copy of the best-selling The Art of Timing the Trade. You're going to also see 5 winners each day receive $100 just simply for placing a trade out there. That's $2,500. Now, the sign-up needs to be by next Thursday, September 5th, by 12 noon in order for us to get everything together. And if you don't sign up by then you're out. You're out. So, we want you to be in. We'd like to see everybody participate in this. So please go to the homepage of TFNN.com. The competition is going to start on Monday, September 9th. If we take a look at IBM, take a look at the weekly chart. There's so many great tools that each of us teach to you here at TFNN. One of those trading tools using these trend lines or price channels. If we take a look at IBM, you can see it was in a nice big rising price channel. This is coming off of the lows back in 2008. Those are the black lines, diagonal lines. If you're watching me on TigerTV, this is a weekly chart that we're looking at. Once a price channel gets broken through, price will try to get back inside it. That's what really took place back in November of 2012. Price got back inside it with some conviction on the week of the week of January 25th, 2013. Price came back, tested it, and then it went ahead and moved higher, moved up to prior highs out there. In fact, got just slightly above it. But boy, IBM here really broke through that price channel the week of April 19th. Again, it broke through it, went back, tried to get up inside it, couldn't, and now it's back down to this little horizontal consolidation zone that has been traveling in a 30-point consolidation area. Weekly chart looks like it's going to hold right now, but if there's a close below 181 with any kind of conviction, that's going to set up and move down to about 151. So you can see the price channel has been broken. Now the question is going to be, what is IBM going to do with this consolidation pattern? If it breaks to the low, if it breaks to the downside, it's going to move all the way back into the August 19th area, which is the 147 to 157 level, just simply the 30-point range. Let's go to Paramus, New Jersey, to Victor. Victor, thanks for calling. Thanks for holding. You wanted to look at CLNE, is that correct?
Yeah, like what's it doing there? It hasn't done nothing in about a year or two. Is it basing? Is it higher, lower? What's going on?
I don't see much in it. Is there a fundamental reason that you're trying to trade this?
That's what I'm wondering.
What?
If they had earnings were up, it's cutting technology. They're making the fuel stations and all that for natural gas and all that. I know
Yeah.
Pelosi's wife owns a lot. Nancy Pelosi owns a whole bunch of it.
Well, I don't know.
Going
I don't
anywhere,
know
or
if I
is it
use
going
that
there?
for a buying opportunity, but what it does have, I will tell you what it does have is the month of March 31st, 2012, on the monthly chart, it's a high volume high out there. And so it says at some point in time, it could get up to the 2475 to 1830 level. But, boy, it's not. You are exactly right. I mean, it has been doing nothing, and I mean
Is that
nothing
good or
since
bad
October.
Is that good or bad when a stock? Is that good or bad when a stock does that? Does nothing.
I think it's neither good nor bad at this stage here. I just don't. I don't see. I would wait for some kind of real sign of strength or something like that if you were really interested in playing this. I think that your money would be better invested in something else that's moving. That's not from a $12
Like Intel,
trade.
right? I'm an Intel
What's that?
fan. I'm an Intel fan.
Intel. Well, if we take a look at Intel, I'll do that here real quickly. The show is just about to come to an end, but let me put that up here real quickly, see if I can take a look at Intel. Intel here broke through that hammer candle. Intel, to me, looks like it wants some lower price, and that lower price ought to take it back into about the April 5th, 2013 area, maybe about $20 or so. That's what the quick look on Intel looks like. Hey, Victor, have a great holiday. Look forward to talking to you again on Tuesday. Folks, everybody be safe out there. Stay tuned for the Nadex Bull Bear Binary Option Hour. Have a great holiday weekend. Be safe. I look forward to seeing you Tuesday morning. Take care, folks.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.